The September jobs report sent mortgage rates higher, and 8 states are now above pre-pandemic inventory levels. There's a lot to unpack here, and if you're thinking about buying or selling a home over the next 6, 12, 18 months, you'll want to pay attention. So if you get some value out of this, you'll like what you hear, make sure to subscribe to the channel. Click on the bell for notifications to keep up to date with everything. And if you want to schedule a call with our team about how we can help you, you can do that with the link in the comments. We saw mortgage rates jump up after the September jobs report. The job numbers that were added were way above expectation. Most experts predicted 150,000 jobs getting added in September, and the number came in at 254,000. So obviously a major delta there, and that set rates up close to 6.5 is what we've been seeing in terms of quotes. Not really a surprise because the labor market is showing some strength. Now, the question you may need to ask yourself here is, can we actually believe these numbers? Because we see the Federal Reserve revise these numbers all the time. They did it back in August where they overshot the actual employment numbers that were added. So that'll be something to keep an eye on. What we know right now is that rates are coming in around 6.5%. What we also saw happen is the unemployment rate stayed right around 4.1%. That's where it came in. So very flat there, which is good news. I don't like to see unemployment going up. And both of those things caused the rates to jump up back to 6.5. And here's the good news here. This time last year, rates were at 8%. 8% is where they were in October of 2023. So we've come down substantially. And I'm going to have Nick put up a chart here of the predictions for mortgage rates between now and the end of next year. And people like Wells Fargo, Moody's, and the Mortgage Bankers Association are predicting rates are going to come in somewhere between 5.5% and 6% towards the end of next year. And if you look at the chart here, there's a gradual decline, which is in line with what the Fed said they're going to do between now and the end of the year, which is make another 50 basis points of cuts to the federal funds rate. We'll have to see how that plays out with this new data here. It might be a little more conservative approach. We're still in a very good position compared to where we were last year when it comes to affordability for home buyers. And we know most sellers, they got to go buy a home as well. So there's good news there. That's number one. And then the second thing that we saw last week is that 8 states, and I'm including Washington in here. We're going to share this report as well because they were just a couple homes behind their pre-pandemic inventory levels. 8 states have now hit above the pre-pandemic inventory levels. And in Pennsylvania specifically, we're seeing that Pennsylvania is still down compared to last year, but inventory's up over 20% year over year. So the inventory is coming. And what we know is that the Northeast, where we live, is typically the last to see a lot of these trends when it comes to inventory, as we're still far below the pre-pandemic inventory levels, even though it is rising over 20% year over year. And that's the number of available homes to purchase is what we're talking about. So we've had these 2 developments happen in the market. We've seen rates jump up a little bit. We've seen inventory continue to grow. And what this leads everyone to talk about is, should I wait? Should I do something now? How do I handle this? So here's what I know. If I'm a home seller right now, and the fact that Pennsylvania, our local marketplace, the Northeast, is far below pre-pandemic levels, and you've got a place to go and you can move in there, there may be an opportunity to sell your home at a great price now rather than waiting until the spring and waiting until 2025 because we're seeing inventory rise. And when inventory rises, there's more competition for you. The flip side is there's a lot of things to do and get ready for the market. You got to get the home ready. You got to get it prepped. Maybe you need to do some decluttering, some new flooring, some painting, whatever that is. So timing and logistics can be an issue here for any home seller. If you're purely trying to time the market, which is what we're talking about here, then there may be some opportunity now. Even though rates creeped up a little bit, there's no signs of demand slowing. As far as home buyers, when you see rates jump up a little bit and inventory continuing to grow, what that tells me is that as a buyer, you're not going to be able to time the market and get the lowest possible rate you can. Instead, focus on what matters most. Are you going to be comfortable in the home? Is the payment in your budget? And do you have 60, 70% of your boxes getting checked? And is it the right decision for your family and your household? That's really how you want to look at these things when you're a buyer, because rates are always going to be jumping up and down. I wouldn't be surprised if rates come down a little bit now that this news is out there this coming week. We'll have to see what happens. Nobody really knows. And the predictions are rates are going to be a little less in 2025. And knowing that rates are going to be a little less in 2025, there may be a whole slew of people waiting to jump into the market. So when you see these things happen, what I look at is that you want to be a buyer when there's not a whole lot of buyers out there. You want to be a seller when there's not a whole lot of sellers out there, assuming you're happy with the price, you're happy with where you're moving to. There's a lot of factors here that you got to figure out first. And then if that's the case, there may be some opportunity ahead of you. And this is all the more reason to sit down and strategize with an agent to understand exactly what your competition looks like as a seller, exactly what the market outlook is for a buyer. Is inventory rising? Are there other options? Is the payment going to fit your budget? And when you have that information in place and you're focused on what's most important, which is what's best for you and where are you moving to, then the rest will work itself out. And you're going to see the market always move around a little bit. It's never a set target. All the more reason to control the controllables, which is where you move to and is it going to be the right spot for you. So if you're thinking about making a move, now is the time to have those strategy and planning meetings so you can be in the right place at the right time when the opportunity arises for a buyer or for a seller, no matter what's going on with rates or what's happening with inventory.